this month's market update. I'm joined today by KC Lowe, Senior Consultant with Frontier Advisors Capital Markets and Asset Allocation Team. Hi there, KC.
Hi, Wayne.
Now, I know that you keep an eye on matters all around the globe, but I thought we might look at some factors impacting the Australian market today. And let's start with the recent meeting of the Reserve Bank. What was exciting that came out of that meeting? What caught your eye?
So at the latest Reserve Bank of Australia meeting, one of the key things to take note of is that they are reducing the government bond purchasing program, so otherwise known as quantitative easing or QE program. So they have tapered or reduced the weekly purchases of government bonds from $5 billion to $4 billion, so a slight reduction there. But what they've also done is they've extended the program. So it's expected to go to at least February next year. Now, previously, the plan was to end the bond purchasing program 3 months earlier in November. So all in all, a slight reduction, but extension out in terms of the program. But just to give you a sense of the relative size of the support still, the Reserve Bank has projected that they will own about 30% of all federal government bonds and about 15% of all state government bonds by mid-November. So even though there's a slight reduction, it is still a very large and supportive program. What else to keep watch of is some of the statements the Reserve Bank came out with. So in terms of the economic outlook, they've said that the Delta outbreaks in Australia are likely to delay but not derail the economic recovery. They've also projected that Australia's economy will get back to our pre-Delta path by the second half of next year. So essentially what the Reserve Bank is expecting is that the Delta outbreaks in Australia has delayed our economic recovery by about 12 months or so. But all in all, there's a slight reduction in the stimulus provided by the Reserve Bank, but the total amount of support they provide continues to be very supportive.
Now, the Australian dollar has been moving around a little bit lately. What's been driving some of that volatility, Casey?
So as an investor, if you have foreign investments, it's quite important to keep track of what's going on with the Australian dollar, just because it can have an impact on the value of your foreign assets.
Yes.
So as you say, the Australian dollar has moved around recently. Over the last 3 months or so, it's gone from close to 80 cents against the US dollar down to just above 70 cents now. And there's a few factors driving that movement. The first one is commodity prices. So the Australian dollar tends to move in the same direction as commodity prices. And recently, coal prices have continued to go up, but iron ore prices have come off from their peaks now. And what tends to happen is the iron ore price tend to be a bigger driver of the Australian dollar. And the reason why it has fallen is due to China. So the Chinese government has implemented more environmental policies, which has led to material cuts in steel production in China. And as a result, there's less demand for Australian iron ore. And the other factor that has driven the Australian dollar down is just the Delta outbreaks in Australia, which has weakened the economic outlook here. So while we've gone back into lockdown relative to other developed markets like UK, US, and Europe, where they're reopening, that relative economic growth has meant that it's led to some weakness in the Australian dollar as well.
Right. Well, at least a falling Australian dollar doesn't give us cause for concern with our overseas holiday plans as it might have done once upon a time. Thanks, KC, for that wrap up of markets. And thanks to you for watching this month's Market Update.